What's going on, everyone? I wanted to give you guys an update on Senseonics, or ticker symbol SENS. Friday, it went on an absolute tear. Anyone who got in after my video was making money, so pat on the back for that one. Hope you guys are eating well. But I wanted to make an update because it's getting a little spicy right now. It's getting to that stage where it's like it's shooting up. It probably needs a pullback at some point. When will that pullback come? It's hard to say. We don't have the FDA news on their 180-day glucose monitoring system that we are waiting for ever so patiently in Senseonics, but that news could hit like literally any day. So up until that news being hit, I do believe this rally can continue, and any dips that we can possibly potentially see should be getting eaten up, because there is also a decent short squeeze score on this stock. So with all that being said, like the video if you guys enjoy this content, subscribe if you are new to this channel, and let's just get right into the update. So first things first, guys, I'd like to thank the sponsor of today's video, which is Moomoo. Moomoo is the best brokerage promotion. They're a licensed FINRA broker, and you can get free stocks for signing up for them. All you have to do is deposit $1, and you can get up to $7,000 in free stock. Guys, someone in my chat was saying they deposit $1, they got a free share of Apple. You can get a free share of Google. You can get a free share of Amazon. You can get a free share of Tesla with only a $1 deposit. It's essentially playing the lotto, but you don't even have to pay to join. So you might as well check it out. It's there in the description or pinned comment section to click that link. They also have their AMC bonus where you deposit $100, you get one free share of AMC stock as well. But guys, $1 to get up to $7,000, absolute no-brainer. The links are below in the description or comment section. Getting into the chart analysis, the weekly chart here on Senseonics is set up very, very nicely. We're using market Cipher to do the analysis. You're catching it on a nice downwards momentum wave and a green dot, meaning that you are essentially buying the dip at the perfect time. If we're looking at a more macro weekly perspective, this could potentially be a multi-week runner. If we're just looking at the Heikin-Ashi candles, which is what we're using, it's a lot different than normal candles, as you guys can clearly see right there. We had a massive spike up yesterday. Moving back to those Heikin-Ashi candles, every time that the Heikin-Ashi candles have turned green, they've been green for at least 4 weeks. The last time here in November was the last time that we got this. It was 4 weeks of green Heikin-Ashi candles. That just essentially means 4 weeks of upwards momentum. Here it was about, let's say, that's 7 weeks, right? So a lot of the times when this Heikin-Ashi candle turns green, it becomes a multi-week runner, meaning that there could potentially be some continuous juice in this stock, especially if that news doesn't hit. Once the news hits, it's probably going to end up being a sell the news event. There's going to be that initial spike up from obviously the news hitting. The news will be super bullish, but then after that, there's going to be no real catalyst to rally off of, and then it'll come back down. But up until then, I think it's definitely a buy and a potential sell the news event. The daily chart's also looking pretty nice. It's just crossing over to the positive momentum, meaning that the momentum could totally carry in to the following week. It gets a little spicier down to this 4-hour chart. It's very, very overbought. You can see the momentum wave is definitely to the upside. The RSI also right here, this red and green line, it just turned back into red, which is an indication to not go and chase the thing. Also, the hourly chart is just absolutely phenomenal, but also absurd in a way. You can see from right here to right here, it's all green money flow. You're catching it on a lot of pumping. So to some extent, it is a bit of a chase, because you really want to catch it on these negative green waves. When right down here is where they gave that last buy signal in January for $2.16. You don't necessarily want to be buying up here, especially if you're looking for a swing trade and rather than like a long-term investment. And typically when stocks are squeezing and they're just rallying uncontrollably, they can stay in this positive momentum much longer than they should, just despite technical analysis. But what you also have to keep in mind is when you are getting these insane rallies, uncontrollable rallies where they just don't go down, they just keep ripping no matter what, the downside risk gets greater each and every single day. So your downside risk at this point right here, not as much At this point, more. At this point, you're have a lot more downside risk. You could come right back down to 280, and that's a significant drop. That would be roughly, let's see it right here, about a 20% drop, right? So every time it keeps rallying uncontrollably like this, it becomes a bit more risky for an entry. But if there is a dip, I do think it's still good to be eaten up. So just look for that dip, potentially a dip back down to 3. It might not happen. It continued rallying after hours on Friday, but if it does happen, eat it up. That's all I'm saying. Not financial advice. Moving into the Ortex data, you guys can see right here, pretty much the same. We don't have to go too much on this. 13 days to cover obviously is absolutely incredible. The sheer amount of short interest of 84 million shares, also super incredible, but it does have a pretty large float at around 400 million shares, making it a bit harder to move the thing in volatile moves. But obviously, I mean, it's been moving pretty quickly, right? Despite having a very large float, and just the fact that there's such high short interest, that makes it absolutely incredible for a short squeeze. Fintel right here agrees with me, and they marked it at the number 7 on the short squeeze leaderboard right there. Moving into the Fintel data, you guys can see only 50,000 shares available to be shorted. Absolutely micro in terms of their actual float size. The borrow fee is not too high. As short interest increases, that borrow fee should in fact go up. Also, with the fundamental changes, the 180-day system, the borrow fee is less important than some other short squeeze stocks. The aggregate short volume ratio also very high, every day being above 40. Moving into the whale flow, we have the last week's of options data right here. $10,000 in premium or more, ask side only. So the straight buying of calls, buying of puts for over $10,000. So those are typically the most significant. As you guys can see right here, it's been about 95% bullish over the past week. On Friday, there was another call option bought here for $92,000 of premium. This is very significant in my opinion. The option chain itself is not super impressive. I mean, each and every single one of these expirations do not have a crazy amount of open interest. So I'm not expecting a gamma squeeze in this stock, but it makes up for it with its short interest data with that 84 million shares right there and the 13 days to cover. So I'm looking for more of a bit of a short squeeze out of Senseonics than necessarily a gamma squeeze. Now, the interesting part about Friday's price action is that we got this whale who was selling a call option for 156,000. Now, we get the see essentially what this whale made, because they did in fact likely buy majority of these contracts on Thursday. This whale right here, $3 call option for 218. And when you go right here to see this multi-leg strategy, there was selling of a $3 call option for 218, also in about 3,000 contracts worth. So this whale from Thursday to Friday, there was a crazy move on Friday, right? They paid roughly $129K for those contracts. They sold them for about $156,000. So they got roughly like a $30K profit right there. But they also bought back out of the money contracts right here at $3.50. Now these contracts are in the money for another $92,000. So they're essentially pocketing about 60 grand off of that trade from yesterday, also still having exposure to the upside. So it still looks like it is bullishly set up, or else why would they pay $92,000? Why wouldn't they just walk away and go home off of that? Historical flow also has been spiking up. Not as much volume on Friday as of Thursday, believe it or not, even though the stock was rocketing, right? And getting back over here to June of 2021, this stock had tons of call option volume. So we're not even close to that point, although it is definitely getting a little bit more risky. Stocks tend to get a bit more risky when there is a spike up in call volume. So just keep that in mind. Moving in to the biggest option trades of the day, it was majority bearish there, and most of it came from the selling of the call option. But again, they rolled it into buying of this call option. Lots of selling of calls, selling of puts by whales across the board. More bid side action in general. Not the best sign, especially when you're seeing some puts getting mixed in there. But the biggest put buyer was also only 4K in premium, which is not too insane there. Again, guys, it is getting a bit overbought, especially on this hourly chart. There could potentially be a pullback, but at the same time, it could potentially continue to run like crazy. It's hard to time the top. It's hard to time the bottom. Likely we'll see around the top that some more whale put buyers will be coming in. So make sure you subscribe so you don't miss the updates on that. I don't have too much more to talk about. You can see the max pain here. It's 2.5 for February 18th. But again, the options chain is not too influential on the price in Senseonics. It's more so just the bid and ask. And what we're seeing here is positive gamma exposure. But again, guys, I'm not relying too much on the option chain for this one, as there's just not too much open interest in the contracts. That's all I really got, guys. That is the update on Senseonics. We're waiting that FDA approval. It could hit at any moment now. This past week of price action may be an indication that we are due to get that FDA approval very, very shortly in Senseonics. So hopefully we get that, guys. It's going to be an amazing week. Tons of plays are set up very, very nicely this week. I'm going to be paying attention to futures tonight as well as market open tomorrow. And you better be there for my market open live stream. I'm streaming every single day at 9:15 a.m. So be there or be square. Drop a like. Subscribe if you're new. Check out Moomoo if you like free money. Deposit $1 on their platform. Get up to $7,000 of free stock. Links below in the description or pinned comment section. Also, if you want all of my buy and sell alerts, when I buy more Senseonics, when I sell out of Senseonics, you can check that out using Hootmoney trade alerts. First link in the description. You get access to all of my buy and sells. You can even make it notify your phone of those buy and sells so you can react on that. None of it is financial advice, but I also give a bunch of exclusive due diligence as well as a VIP chat where I like to answer questions for all those people in there as well. So check it out. Again, links are below. First link in the description. That's all I really got, guys. Hope you all enjoyed. I'll be seeing you guys next time. See ya!